1 hour before, the US announced a moratorium on Iran strikes. Someone bought $1.5 billion in S&P futures contracts, 4 to 6 times normal volume. Simultaneously, $192 million in crude oil futures. 1 hour later, the announcement dropped. Those positions made a fortune. Was it a coincidence? Maybe. But it was not the first time, and it was not the last. Today, we are going to look at the most controversial financial story of 2026, and the question that nobody in power seems to want to answer. Chapter 1. How markets move on information. First, the mechanics, because understanding how this works makes what happened impossible to ignore. Markets move on information. The faster you get information that moves markets, the more money you can make. This is why insider trading is illegal for corporate executives. A CEO who knows their company is about to miss earnings and sells their shares before the announcement has an unfair advantage over every other investor. The same principle applies to political information. A tariff announcement, a war, a policy reversal. Each of these moves markets dramatically. Anyone who knows about them in advance, even minutes in advance, can position to profit. The question is whether the most powerful office in the world has been generating that kind of advanced knowledge, and whether people connected to that office have been using it. Chapter 2. The Tariff Pause. Let's start with what is documented. On April 9th, 2025, at 9:37 a.m., Trump posted on Truth Social, "This is a great time to buy, DJT." Markets remained volatile, but largely flat. Then at 1:15 p.m., Trump announced a 90-day pause on most tariffs. The S&P 500 gained 9.5%, one of the largest single-day jumps since World War II. Just minutes before the tariff pause announcement, unidentified traders placed millions of dollars in bullish options bets on the Nasdaq and S&P 500. Nasdaq call option volumes spiked significantly 20 minutes before the news broke. Hours before the announcement, Trump posted messages on Truth Social that seemed addressed to investors. "This is a great time to buy," he wrote, signing off with DJT, which also serves as the stock symbol for his company, Trump Media and Technology Group. But was this insider trading? Legally, no proven case has been made. Was it the kind of pattern that would trigger an investigation if it happened at any public company? Absolutely. Chapter 3. The Iran pattern. The tariff pause was not an isolated incident. 1 hour before Trump announced a 5-day moratorium on Iran, strikes insiders purchased $1.5 billion in notional S&P E-mini futures contracts, 4 to 6 times normal market volume, alongside $192 million in crude oil futures. Earlier in March, SPY call options skyrocketed an unprecedented 24,650% in roughly 80 minutes after Trump unexpectedly declared the Iran conflict very complete. The Pentagon faced intense scrutiny following reports that a broker for Defense Secretary Pete Hegseth attempted to move millions into defense ETFs just weeks before the US launched military operations. Former Trump White House Communications Director Anthony Scaramucci stated directly, "These people are making hundreds upon hundreds of millions of dollars trading on information that only exists inside the most powerful office in the world. This isn't politics anymore. This is a financial operation running out of the White House." Chapter 4. The Trump trades. And then there are Trump's own trades. More than 3,700 stock trades were executed by accounts linked to President Trump during the first quarter of 2026 alone, covering hundreds of millions of dollars in transactions over 3 months. Vice President J.D. Vance defended the activity as entirely managed by independent advisors with no input from the White House. "The president doesn't sit at the Oval Office on his computer, on his Robinhood account, buying and selling stocks," Vance said. Maybe. But the timing of those trades relative to major policy announcements has generated significant scrutiny. Palantir, one of the more volatile large-cap technology names of 2026, with its share price tied closely to government AI spending and defense procurement, featured prominently in the disclosures. Any perception that presidential commentary moves the stock creates a discomfort that trading trust mechanics alone cannot resolve. Chapter 5. The legal reality here is the uncomfortable truth. Almost none of this is clearly illegal. The President of the United States is exempt from most insider trading laws that apply to ordinary citizens. There is no law that explicitly prevents a president from making policy decisions that benefit their own portfolio. The legal framework simply was not built for this situation. Trump called on Congress to pass the Stop Insider Trading Act during his State of the Union. But critics described the bill as Orwellian, a bill advertised to stop insider trading that does not actually stop insider trading in any meaningful way. Congress has so far not initiated any formal proceedings around the disclosures. Republican leadership has shown little appetite for investigating an issue that sits uncomfortably close to their party's most powerful figure. The system that is supposed to prevent this from happening is run by the people who benefit from it happening. Draw your own conclusions. Chapter 6. What this means for your portfolio. Set the politics aside entirely. As an investor, this pattern has a practical implication. Policy announcements from this administration have been extraordinarily market-moving. Tariff reversals, war announcements, policy pauses. Each one has created enormous volatility and enormous opportunity for anyone who knew in advance. You do not know in advance, but you can position for the volatility itself. Option strategies that profit from large moves in either direction, straddles and strangles on major indices, perform well in environments of high policy uncertainty. You do not need to know which way the market moves. You just need to know it is going to move. Keep position sizes smaller than normal. High policy uncertainty means higher tail risk. The kind of single-day 9% moves we have seen, in both directions, can wipe out undiversified positions overnight. And watch the patterns. When unusual options activity spikes before a scheduled administration announcement, that is information. You may not know what the announcement is, but someone apparently does. The most powerful market-moving information in the world sits inside one building in Washington. The laws designed to prevent that information from being traded on were written before anyone imagined the situation we are in. Whether what is happening is legal or illegal may ultimately be decided by courts and regulators. What is not in dispute is that it is happening. The trades are documented, the timing is documented, the profits are real. As an investor, your job is not to be outraged. Your job is to understand the environment you are operating in and position accordingly. If you want to understand where we are in the market cycle right now and what that means for your money, check out my market cycle video. And if you want the complete framework for investing intelligently in this environment, my Investing Masterclass covers everything you need to know. Both links are in the description.